Welcome, dear traders, it's me, Kate Stichina, and you're watching a recap of the Asian session. Sentiment in the Asian session was mainly bearish ahead of the Fed meeting. Besides, investors are still digesting the Reserve Bank of Australia's unexpected decision to raise the key rate. Concerns over the banking crisis in the United States also affected trading in the morning. The collapse of First Republic Bank and its subsequent takeover by JP was the second largest bank failure in the US history. It's hardly surprising that optimism in the stock markets is gradually waning. Major central banks remain committed to aggressive tightening despite the recession risks. They are certain this is the only way to combat high-sky inflation. For example, the Reserve Bank of Australia hiked the interest rate once again after taking a pause on the previous meeting. In the morning, Australian stock indexes plunged to monthly lows. Investors seemed to ignore the IMF's positive forecast for the next 8 months. They are mainly focused on the upcoming Fed meeting. Asia and Pacific will be the most dynamic of the world's major regions in 2023, predominantly driven by the beyond outlook for China and India. The IMF said in its report. And meanwhile, the overwhelming majority are betting on a new rate hike. According to the FEDWATCH tool, more than 90% of traders expect the central bank to hike the rate by a quarter point. There are literally a few hours left before the meeting. Let's discuss what sentiment prevailed on forex in the morning. The US dollar index is losing ground. It has already sank below yesterday's low of 102. In the Asian session, it slid into the support zone of 101.60 and 101.90. The greenback has been declining for the second session in a row, reaching 101.60. If the bearish momentum persists, the US currency may tumble to the support level of 101 points, which is the weekly low of April 26. After that, it's likely to touch the pivot level of 100 points. The US dollar is extending losses due to 3 factors: the banking crisis, the risk of default, and weak labor market data. According to yesterday's JOLTS report, the number of job openings fell to a 2-year low. It fueled market concerns about a potential slowdown in the US economy. Investors also prefer sitting on the sidelines given the uncertainty of the Fed meeting. After the Reserve Bank of Australia's unexpected rate decision, traders do not rule out surprises from other regulators. The trajectory of the currencies will mainly depend on Jerome Powell's speech at the press conference, apart from worries about the banking sector. Investors also keep an eye on the situation with the public debt in the United States. The government could run out of cash to pay its bills as soon as June if Congress does not raise the debt ceiling. It means that the Fed needs to act very carefully. The yen regained momentum as a safe haven asset amid market jitters. The dollar-yen pair dropped below the psychologically important level of 136. At the end of the Asian session, it approached 135.50. As trading floors in Japan are closed for the long holidays, the government bonds were not traded today. However, US Treasury note yields fell. This is bullish for the yen. As a result, the pair entered the downward range of 135.50 and 136.60. It may even dip to a new weekly low. However, the yen's upside potential is still limited by the rate gap between the Fed and the Bank of Japan. As seen on the chart, the Australian dollar was extremely volatile in the Asian session. Eventually, it slid to 0.6656. Traders were reluctant to buy risk assets ahead of the Fed meeting. At the same time, the Aussie retains a weak bullish momentum thanks to yesterday's unexpected interest rate hike by the Reserve Bank of Australia and to its hawkish stance. For this reason, the Aussie remained volatile, moving in the narrow range of 0.6655 and 0.6678 on a Wednesday morning. While the US dollar index was driving down because of several bearish factors, the New Zealand dollar entered the upward channel of 0.6205 and 0.6249. Fresh employment data bolstered its growth as the figures signaled further aggressive tightening. The Kiwi dollar pair rose to 0.6235, and the New Zealand dollar is likely to continue its upward movement today until the Fed meeting or market reaction to Jerome Powell's testimony. Now, investors are anticipating the Fed's rate decision. It's likely to affect not only currencies, but also dollar-denominated debt of some countries. That's all for now. Watch our video reviews to keep close tabs on the latest market news, and see you soon.